Sam, and welcome everyone. Today we're going to be talking about opening new accounts, and certainly there are so many issues that converge on that signature card contract, account agreement, and the face of that card or that paper card, or sometimes it's even a electronic record now and not always a paper record, but the ownership, the titling, the legal documentation. So before we get into that, remember and always remember we have this federal umbrella that now sits over everything. And these two pieces called Customer Identification Program and Customer Due Diligence, or CIP and CDD, as most of us refer to them these days, they comprise the federal umbrella under the Bank Secrecy Act, and all of that came out of something called the USA Patriot Act, and it was in Section 23 that the Treasury actually said to Congress said to the Treasury, let me get that backwards, Congress said to the Treasury, you need to write some regulations, and they did, and instead of writing a whole new regulation, they folded it into the Bank Secrecy Act. Now, the interesting thing about all of this, particularly customer due diligence is not a regulation yet. It is just a chapter in the Bank Secrecy Exam Manual, the FFIEC BSA Exam Manual, but it is still considered to be one of the cornerstones of your BSA program, and consequently is examined to that level. Do you know who you're doing business with? Do you know who owns the business? And so while it'll be hard for you to cite a regulation on why we have to do this today, although certainly we're probably going to have those regulations hopefully by the end of the year and know what we have to do. I think some of it was a weight on the Foreign Accounting Tax Compliance Act, and now we should get those from FinCEN, those final rules, but we'll be aware that that hasn't finalized at this point. So some of this federal is very still kind of hanging out there as a best practice and not necessarily as a regulation. But CIP is a regulation, and it is a section. If you go to 1010 of the Bank Secrecy Act, you'll see that's the general rules for everybody, and then 1020, of course, is the rules for banks. And in 1020, you'll find the CIP regulations, and they're very detailed, as you would expect, about account opening. Now, even in the level of detail, however, they set up sort of the 4 fence posts that you are to live. There's no one that says you have to get 2 forms of ID or that you have to get 2 forms of non-document verification, but that's certainly been kind of the standard. And so you get the name, address, date of birth, and social on a person before you open the account, name, address, and EIN number on an entity, and that's prior to opening the account that you have to gather the information. The verification through documents, if you rely on documents, and that's what we're talking about primarily today, you would get before you open the account, but no later than a reasonable time afterwards. So some financial institutions have taken 10 days or 20 days or 30 days to get those finer paperwork, especially on business accounts. And non-document verification could be anything. Somebody was just asking me, like, what do we do on non-document verification if we're opening accounts online? Well, you wouldn't be getting a driver's license and you wouldn't be getting a Social Security card if you're opening accounts online. You would do more non-document verification. So you could go to USPS and check their address. You could send them a letter of welcome to check address. You could call them to check their phone number. You could look them up on whitepages.com. You can Google them. You can run them through a third-party vendor. You can OFAC them. All those things are considered non-document verification. So those are things that are not a document. And by the way, you know, when they write these regulations, whoever writes them and drafts them just makes up these words. You know, there's documentary, non-documentary will show up in spell check as a misspelled word, but not in the Bank Secrecy Act. And then in this regulation, there was also reference to a Section 326 government list, which that list has not been populated at this time, but it certainly is still in the regulation. It still has to be in your policy if you have a list that you would check it. And that's just in case a terrorist group, you know, strikes later And if they strike later, then this list can be used. And all of this has to be recorded somewhere. Some people photocopy ID, some people scan it, some people just write down the numbers. Sometimes that depends on state law. So we certainly do see that everybody's got a different take on this, and it's all risk-based. So one form of ID, 2 non-docs, 2 docs and 2 non-docs, no docs and 4 non-docs. You know, everybody kind of has their little system of what they're doing. And that's what I mean about that there's some room for risk management here, in that everybody doesn't have to look the exact same, because people will always ask me, how come the financial institution down the street doesn't do what we do? Well, you know, maybe you're stricter on the way in and then you have less monitoring of accounts on the way out. But maybe it's just the level of risk that your institution has. Now, when you're talking about CDD, what I would always encourage, at a minimum, the purpose of the account, the source of the funds, who really owns this business. And you're probably looking at going down to 10%, because that's what they did in the Foreign Accounting Tax Compliance Act. So if they're doing that in foreign financial institutions for us, then probably we're going to have to do that. So again, this is not a law yet, but it's still a best practice to find out what transactions that your customer is likely to engage in. And there's a lot of detail about this. So sit that federal law over everything that we talk about, and also don't forget to make sure that you address your job as a withholding agent. So to avoid withholding, your account holders must sign a W-9 or a W-8 bin, your customers or your members if you're a credit union. And you can see there that the W-9 was updated recently, August of 2013. And it does have there on the right-hand side the exemption codes now, and it also has exemption from FATCA reporting, because that's going to be used by foreign financial institutions to detect U.S. ownership in accounts also. So when you're working with people, you could easily see and opening accounts that there could be basically 3 types of Social Security cards, and those would be the ones that you and I get as U.S. citizens and permanent resident aliens, and then there would be the valid for work only and then not valid for employment. Don't use these numbers, though, to determine whether they are or not where their tax home is. That's a question you have to ask the account holder. Is your tax home in the United States? I mean, that's basically what we're asking. We're not asking their immigration status. We're asking how will we put them on our system. Do we file them with a 1099 INT on interest-bearing accounts, or do we file them with a 1042-S on the non-resident alien side? But you can certainly come into this country and get a not valid for employment and stay here long enough that you meet the substantial presence test in the United States. And when that happens and your tax home is the United States, then that's where you pay your taxes unless you have a closer connection to a foreign country. So this was pulled off of the Social Security website, and you can see it there. 3 different types of Social Security cards, all of which are fine and give you Social Security numbers, but you need to ask where their tax home is before you end up putting them on the U.S. side or the non-resident alien side. Very, very important. Now, if you do put them on the non-resident alien side, and again, you see on page 10 the way the different Social Security numbers will look. And some of you may get Social Security cards as part of your CIP. Some of you may just write down the number. So again, that varies from institution to institution about what documents that you claim. On the new W-9, there is a list of exempt payee codes, and these are really not different except for the fact that they've given them a number. So if you are going to use the W-9 itself, then you have to go in here and use 1 for IRA and say 5 for corporations if your payee is exempt. If you're using a substitute W-9, then the substitute W-9